For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. First and foremost, thank you to everybody for the best wishes, and obviously juggling a lot with having everything shipped and getting out of the house, and last few nights before I depart, and just still trying to squeeze in as much as I can, making my day full and sharing my knowledge with other traders. So again, thank you for the emails and the support and comments and questions, and just I'll try and address as much as I can. Simple, powerful approach to 50 pips a day. I've talked about this in one of the previous videos. If you had only traded this one system, my primary focus with trading the US session is always when a market breaks or is at the high or low of the week, primarily. And filtering out the pairs, I want to be hopefully on the outside, or if I'm taking something from the inside, being with the trend. If it's on the outside, for example, we had news last night. You've heard me say this. I do not trade the news. I know there's traders who like to focus on the news. Whatever works for you, it doesn't really matter. And I love it when I get some of these troll emails and troll remarks and troll questions, because I can tell they're from trolls and they're not serious or they're not real traders, because a real trader already has strategies and setups, and they understand that there are many parameters that you need to address. And one trader in particular yesterday talked about in my video what is required to trade full time. And obviously, that was a short video. There's a lot of stuff that can go into that. One of them was having a trading tribe. And some traders don't like that. They like to be focused and individualized and do their own thing. And I understand that, because I can relate to that. Whereas other traders find they work better in a supportive environment, sharing ideas and whatnot. But coming back to today's topic, the simple, most powerful technique that I always focus on is the previous day's high and low. And then we talk about the day count. Day 1, day 2, day 3. It's like a stair step. We talk about up by the escalator, down by the elevator. And once you grasp that, the day count makes sense. Filtering out pairs that are at the highs of the week. Day 1, day 2, day 3 on the news. On the news itself. Heading into the session. The vertical move through the previous day's low. The first thing I will look for after the news is the first bounce trade. The first bounce trade is after the first 15 minutes has finished printing. Now, okay, so payrolls, we look at the Swiss franc. Don't chase the hot chick. So here's what happens. We have an instrument that's broken out on payrolls back up into the peak formation. Okay, I talked about that's a dead giveaway for a potential pump and dump scenario into the next week. A vertical move that peters out, 3 pushes, breaks down on Monday in the Europe session, rolls over for the low-hanging fruit trade on Monday. Hint, hint, print these off for your playbook. Low-hanging fruit. So now we have a market that's pulled back inside of the range. We're in the previous week's range. I talked about the high and low are your targets. When you're inside, you want to be trading with the trend if you have that setup back towards the previous day's high or low. So we have a Europe session short, they pull back, and a Europe session low-hanging fruit trade in the U.S. session. For traders trading later in the U.S. session, Northern Hemisphere, etc., they may have taken a long trade. This is a counter trend long after the market works into the low. But we have our first red day on Monday. First red day on Monday that breaks down, pulls back, and we get our 3 peaks. First red day, the trade setup that I look for is the 3 peak trade setup. It can be 3 sessions. It can be 3 peaks. This trade, again, US Swiss, has the potential to move in the Europe session, which it did. It rolled over, and we have a move into the US Open that's already at the previous low of the week. The news goes vertical. Now, this is the hot chick. After the news, it's already taken out the low of the week. If we look at its sister pairs, US CAD, US Yen, okay, we have a market, and if you can't see this, go to your own charts and look at them. 15 minutes for the levels. But I'm just painting this scenario about understanding previous days high and low, previous weeks high and low, peak formation Friday on payrolls, the half Batman reversal trend trade on the Monday. We're back inside of the range. First red day, they bring it back up into the Europe London shorts. Okay, so first red day traders that go short right off the bat get trapped. You're down low. This is always something you have to be considering on the first red day. First red day, understand this. If you're inside and you're saying if a down day is a first red day or an up day is a first green day, it needs to break out and fail. That's trapped volume. That's the reversal, whether it's at the low of the week. Okay, so we have first green day down low at the low of the week, the reversal previous week on the Monday, first green day. Breaks out, puts in a peak formation, comes down and gives us our 3 peaks for the reversal, back with the long trade. So they trap longs first. First mouse gets caught. They go down and put a low in place into the peak formation low before blowing off through the high of the week. Low of the week, high of the week. High of the day, low of the week. This pair blows off on the news. We'll zoom out here a bit. It blows off on the news. So this is a gain. When it breaks down and we're targeting the low of the week, first bounce trade. I'm looking for first bounce, either into the New York session. So you've heard me say, first hour, if there's a trade, whether it's news or a high of the day, low of the day scenario, the next time I will look is the New York Open. So I don't just keep trying to trade it. I wait for the New York Open, 9:30. New York time, whether it's summertime, whether it's wintertime, 9:30 New York time, equity market opens. Quite a few traders asking me to review gold. Inside bar on Monday. So no previous day's high or low are taken out, but understand we went down, went peak formation low, consolidation. This is the recipe for the level 1 consolidation for the straightaway trade into level 2. Trap volume, breakout, pullback, vertical move. So whether you trade that or not is irrelevant. It's understanding when we come to day 2 that we're possibly targeting back to the high of the week. So if my thesis is they're going back to the high of the week, I'd be looking for trend trades, not counter trend trades. If I'm only trading the US session, we have a high of the day sell. But that comes back to, was there other instruments or other setups or other trades during that session that were potentially better? Or was this the best setup? So we go up 3 levels of rise for the reversal trade for 50 pips down. So again, it depends on where you're trading. This was a trend trade at the open, a reversal trade at the New York Open. Trend traders may have been taking this long, but if you're looking to counter trend, day 2 has a higher percentage of probability of having a successful reversal trade, especially after we've taken out previous day's high and the previous Friday's high, even though we're inside the high of the week. So that was the high of the week, reversal trade. It breaks out, short trade continues, and then we get day 3 on the news going vertical. So again, when you're at the high of the week on day 3, I'm not looking for a first bounce trade. This is 3 pushes into a high, and then we get our bear pin hammer after the high of the day is locked in. 1 push, 2 push, 3 pushes. That's 15 minutes after the news. The second 15-minute bar opens up for a fast 75 pip move down. So again, simplicity and just having a think about what's happening here. We go up vertical through the high of the week. They go up into the third level in our next 100 pip box and they work the high. We put a high in place. We go up for a second push. They go up for a third push and break down, and then we get our bear pin hammer. And where are they going? Back to traders who potentially went long on the news for the breakout pullback. So oil, again, coming back to the simple premise, previous day's high or low. Just prior to the US 12 candle window, they trigger breakouts at the low of Tuesday. The news, they reverse and the news goes vertical to the high of the day. They go vertical, hit the stops, trigger breakouts at the high of the day. 1 push, 2 push, 3 pushes before breaking down. And there's our pattern. That little 1, 2, 3 right at the New York Open. There's our peak formation for the 200 pip move down back through the low of the day. 1 bar stop. This is 1 minute before the market opens. This is our pump and dump pattern after they've locked in the high. Peak formation. Okay, peak formation. They take this. They've already hit the high of the day. They trade back up into it. 1 push, 2 push, 3 pushes, and break down. Come back up into that upper level. Okay, low of day, high of day, back to the low of the day and the low of Tuesday, possibly targeting as far down into Monday's low. So high of day, low of day. Timings. Keep it simple. I know a lot of traders have emailed me stuff. They're frustrating. They're banging their heads. They don't understand what it is that I see and they don't see. If you work with 2 lines on your chart, you might see this better. Okay, low of day, high of day. Quit trading inside here unless you have a reason to be in that market. Understand that the best opportunities will come when a weekly high or low has already been traded through. So we have high of the week, peak formation, that fails. 3 things markets do. They break out, they pull back, and they fail. They break out, they pull back, and they trend, or they are in a trading range. When we get a new week, the market starts inside of Friday, but the market broke out and pulled back. It had already put a peak formation in. This is the textbook reversal day after a vertical move. Okay? So now our thesis is high of the week, low of the week. And if we're targeting the low of the week, we want to be selling the high of the day. Maybe the high of the session. So you might be selling the high of the session in London, targeting the low of the day and the week. Or you might be selling the high of the US, targeting the low of the week, but it peters out at the low of the day. Next day, though, you get the sell high at the Europe Open, breaks down, keeps running, blows off on the news. U.S. traders that were following the Swiss franc, chasing the hot chick, still got 25. The difference was that the yen and the Canadian dollar still had room to go to the low of the week and offered 50 to 75 range as opposed to 25. Gain vertical news. First bounce, New York Open. We're looking for that continuation trade now back through the low of the day, targeting the low of the week, which was down here, but we had a peak formation reset on the Wednesday. So for traders that have asked, what do you mean by peak formation reset? A peak formation reset is when a market is moving in one direction. Day 1, day 2, day 3, but we get a vertical peak formation and the move continues in that direction. We're up here. We know that this is now a peak formation reset within the week. That takes on the new low of the week, as did Friday, but we blew through Friday on the way down to 2 Wednesdays low. So we saw that on the Friday. You'll see that often. Maybe on a Wednesday, we can get a day 1, day 2, day 3 into Friday with Wednesday peak formation, Friday peak formation. Little things like that, things to pay attention to. Most importantly, understand that when we break daily levels and we start a new session and we're outside of a range, we want to be looking. The ideal best case opportunities are either at the higher low of the week or after we've had day 1, day 2, day 3 breaks down for the vertical move. Zoom in on these. Go back and study them. This is where you will find your safest opportunities in terms of managing your risk and for asymmetrical risk-reward opportunities. You don't have to chase the news. This market still gave a very high-quality best trade setup, following through after the news. Next timing window, New York Open. Hopefully you got value from today's video, traders. Again, appreciate all the comments and feedback. Have a great day today. Keep it simple. Focus on your best trade setups, and may the markets go with you.